Transforming your habits for success in blockchain investing. Top 5 tips. Blockchain technology has revolutionized the financial landscape, offering unprecedented opportunities for investors. However, success requires a strategic approach and the adoption of specific habits. This essay provides 5 actionable tips for practitioners to transform their habits and excel in blockchain investing. 1. Invest in continuous learning. Understanding the intricacies of blockchain is crucial for success. Engage in regular learning through online courses, books, webinars, and industry conferences. For instance, Coursera offers a specialization on cryptocurrency and blockchain that covers essential topics such as smart contracts and the Ethereum blockchain. Continuous learning equips investors with the knowledge needed to navigate the complex blockchain landscape and make informed decisions. 2. Diversify your portfolio. Diversification reduces risk by spreading investments across various assets and sectors. Consider investing in a mix of cryptocurrencies, blockchain startups, and established companies that leverage blockchain technology. For example, Bitcoin and Ethereum are popular choices for cryptocurrency investors, while IBM and Microsoft have significant blockchain initiatives. A diversified portfolio minimizes the impact of potential losses from individual investments and maximizes long-term returns. 3. Adopt a long-term perspective. Blockchain investing requires patience due to market volatility and the long gestation periods for many blockchain projects. Focus on understanding the underlying technology and the potential of each investment rather than short-term price fluctuations. For instance, Bitcoin took nearly a decade to reach its all-time high in 2021. A long-term perspective allows investors to capitalize on the growth potential of blockchain technologies while minimizing emotional decision-making driven by market volatility. 4. Embrace due diligence. Thorough research is essential to identify promising investment opportunities and minimize risk. Assess the team behind a project, its technology, market potential, and regulatory environment. For example, Binance, one of the largest cryptocurrency exchanges, has faced regulatory scrutiny in several jurisdictions. Embracing due diligence helps investors make informed decisions and avoid investing in potentially risky or fraudulent projects. 5. Stay updated on regulatory developments. Blockchain investments are subject to evolving regulations, which can significantly impact investment strategies. Regularly monitor regulatory developments at the national and international levels. For instance, the Securities and Exchange Commission (SEC) in the United States has issued guidance on how securities laws apply to initial coin offerings (ICOs). Staying updated on regulatory developments allows investors to navigate the complex regulatory landscape and make strategic decisions. By investing in continuous learning, diversifying portfolios, adopting a long-term perspective, embracing due diligence, and staying updated on regulatory developments, practitioners can transform their habits and increase their chances of success in this dynamic field.